I want to talk about annual meeting season because it's coming to a close and it ends this week. It's been a breakout year for environmental, social, and governance issues, known better as ESG. And Leslie Picker has been really following all of it from the very beginning. She joins us this morning. Leslie.
Hey, Andrew, that's right. It is nearly the end of annual meeting season this week, one which saw unprecedented action on the ESG front. E, which stands for environmental, huge jump in average support for climate-related shareholder proposals. You can see it right there. Many large investors pledged within the last year to engage with companies to shrink their carbon footprint, while their votes increasingly reflected that commitment. The S, or social, came into focus through board diversification. Women comprised 40% of new members, while blacks made up nearly a third of new members, triple the percentage from the prior year. But for many experts, it was actually the G, or governance changes, that came as the biggest development.
Perhaps the most seismic development that we've witnessed so far this year is with shareholders rejecting executive compensation packages. And the reason for that, I think, is that investors, mainstream in particular, are getting more and more comfortable voting against management, making their voices heard at the ballot box.
An unprecedented 4% of say-on-pay proposals were rejected this year, with more on the chopping block over the next few weeks, from MasterCard to Activision Blizzard. Guys.
So I'm curious what you think the real implications are this year, but more importantly, actually, what may happen next year, Leslie.
Yeah, we asked ISS about this. What are companies actually doing to prepare for next year, given the way that the votes went this year, which I do think caught a lot of companies by surprise. And she said it's all about disclosure. The main reason why the say-on-pay proposals were rejected is because a lot of companies in the pandemic moved their goalposts. You know, they expected the business to go, south amid shutdowns and so forth. Investors didn't like that, especially given that the market did so well last year. So a lot of compensation packages did go up. So more disclosure on that front, more disclosure on climate, and then, of course, more disclosure on diversity, both on the board and within the rank and file of the organization.
Shepard Smith here. Thanks for watching CNBC on YouTube.